Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two stocks that score a 10 out of 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a perfect 10 on the TipRanks Smart Score. This looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of that 10 out of 10 score, they also come in with a strong buy consensus from Wall Street analysts. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's stocks using the TipRanks Top Smart Score Stocks page. Found underneath the Ideas tab, here you'll find a collection of stocks currently scoring a 10 out of 10 on the TipRanks Smart Score. You can narrow down by market cap, sector, and how long they've been scoring that perfect 10. And just before we get into today's companies, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget you can download the TipRanks mobile app for your Apple or Android device by using the links in the description down below. Let's get right into our two perfect 10 stocks. First on the list is a company called Chart Industries. They trade under the ticker GTLS, currently priced at $125 per share. Overall in the past year, they are up 3%, but you can see they did recently take a big dip here. In the last 3 months, the stock has fallen 21%. They do currently score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, insiders scooping up shares, and positive crowd wisdom. Chart Industries is in the clean energy sector as a provider of cryogenic cooling technology that's necessary for the production and transportation of liquefied natural gas. They develop and distribute cryogenic and compression equipment used in the industrial gas market. Their product portfolio is vital in every aspect of the liquefied gas supply chain, including the upfront engineering, service and maintenance, and repair. Liquefied natural gas is an essential component of the global transition towards clean energy sources, and Chart Industries has a global position, with offices and facilities in the Americas, Europe, Asia, Africa, and Australia. Earlier this month, they entered into an agreement with ExxonMobil. They'll be providing their IPS-MR liquefaction process technology to the oil giant's Rovuma LNG project in Mozambique. Chart Industries will be sharing their Q3 earnings report at the end of this week on November 1st. This follows their second quarter, where despite having all-time record sales, the company did miss on both earnings and revenue. For their third quarter, analysts are anticipating earnings per share of $2.50, which would nearly double last year's. For their second quarter, they reported earnings of $2.18 per share, which did fall 30 cents short of expectations. Revenue did also fall short at $1.04 billion, missing by just $70 million, but it did grow 14.5% year over year. The company saw orders of $1.16 billion, which increased 12% year over year, and reported record gross margin and operating income. We've had quite a few analysts weighing in on the stock in the month of October. Recently, a 5-star analyst from Stifel Nicolaus reiterated their buy rating, though they did lower the price target by $1. They said that LNG prices have been reasonably strong throughout the quarter, which has a modest upward impact on earning estimates with commodity price exposure. They expect continued healthy downstream activity and the potential for U.S. FIDs in the next 6 months should restrictions be lifted. Also recently reiterating a buy rating but lowering their price target again by just $1 was an analyst from Barclays. The firm sees limited downside risk to estimates, saying macro concerns, low expectations, and a lack of catalysts are well reflected in the group's discounted valuations. With 2025 looking a lot like 2024, outperformance will be dictated by differentiated businesses and themes driving earnings visibility in a low-growth market. So with some cautiously optimistic outlooks there, the Chart Industry stock does come in as a strong buy with 12 current analyst ratings. With 9 buys and 3 holds, the average price target comes in just above $178 per share, implying an upside potential of over 42%. Looking at those price targets down below, our high-end price target comes from Seaport Global at $235, which would imply an upside of 88%, while our low-end price target is $144 from Goldman Sachs for an upside of 15%. Our second 10 out of 10 stock today is Turtle Beach. They trade under the ticker HEAR, or HEAR, currently priced at $16.46. They have jumped up 100% over the past year, and in the last 3 months are up about 8.4%. They score a 10 out of 10 on the TipRanks Smart Score with bullish blogger sentiment, insiders scooping up shares, and positive crowd wisdom. Turtle Beach engages in the development, commercialization, and marketing of audio peripherals, specifically headsets. Turtle Beach is one of the world's leading gaming accessory providers, known for pioneering first-to-market features and patented innovations in high-quality, comfort-driven headsets for all levels of gamers, making it a fan-favorite brand and the market leader in console gaming audio for the last decade. Under their RoCap brand, Turtle Beach creates award-winning keyboards, mice, headsets, mousepads, and other PC accessories. And the company recently announced how they are expanding their presence around the globe, as Canadian gamers can now find the latest Turtle Beach gaming accessories at Best Buy Canada, and across Mexico and Colombia and Chile, they're launching a variety of new gaming accessories. They'll be sharing their Q3 earnings report on November 7th. This does follow their second quarter, where they had a wider than expected loss, but did beat on revenue and increase their full year guidance. For their third quarter, analysts are anticipating earnings per share of 15 cents compared to a loss of 15 cents in the same quarter last year. For their Q2, they did report a loss per share of 35 cents, which was 5 cents wider than expected, but revenue of $76.5 million did grow nearly 60% year over year and beat estimates by $5.85 million. The company did raise their full year 2024 guidance on continued execution strength and repurchased $15 million of common shares in their Q2. Turtle Beach has had two analysts reiterate their buy ratings in the month of October, one from Stifel and one from Roth MKM. The analyst at Stifel didn't comment too much, just said they were adjusting their expectations ahead of the earnings report and increased their price target by $3 per share. While the analyst at Roth said that the company's revenue has grown strongly, driven primarily by the PDP acquisition and the launch of several new products. The adjusted EBITDA at Turtle Beach also grew due to operating leverage and cost synergies associated with the merger, and the company looks well set up for Q4 growth thanks to those factors as well as its continued international expansion. There are 6 analysts overall with current ratings on the Turtle Beach stock, and it does come in as a unanimous strong buy. The average price target comes in at $22 per share, implying an upside potential of over 33%. Looking at those price targets down below, our low end is $17 from Oppenheimer here back in August, with a slight upside of 3%, while our high end price target does come from Roth at $26 for an upside of nearly 58%, and that is the same price target as Lake Street here as well. So there we have 2 strong buy stocks, both currently scoring a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below, and if either one catches your eye, I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always sticking to your own due diligence and research. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.